How's it going, guys? My name is Franco and welcome back to the channel. Today we're going to be going through my, I guess, 5 tips or, some advice if I was new to the crypto market, or not necessarily if I was new, but if I had to give some advice, say my grandmother asked me, Franco, I want to get into crypto, what should I do? Well, I'm obviously going to, try and help my grandma out, but I'm going to give her these tips, because obviously a lot of new people are coming into the market. That is evident by things like Google Trends, obviously just, looking at what the market's doing, talk around the street. I've got colleagues asking me about crypto. It's crazy. It's getting into that real FOMO sort of stage of the market, which is getting scary. If you've been in this market and you've bought the lows, it's a pretty interesting time seeing how sentiment has changed. But that means a lot of new people in the market and they're wondering what is the best steps that, I should take. Well, hopefully this video covers some things. As I said, if this was my grandma, I'd give her the exact same tips. So we'll just run through these 5 tips that will hopefully help new investors in the crypto market. But of course, before we do jump any further, guys, remember to hit that subscribe button. We were aiming for 1,000 subs by the end of the year. It looks like we're going to pull up short, but that's okay. We'll keep striving. 900 is our next goal. We're looking to get monetized on this channel. That would help out a lot. Hopefully, encourage me to make more and more videos. But you can see we do a whole variety of things. We cover exchanges. We do some technical analysis. We cover, top 5 exchanges in Australia. We cover all different things crypto related. So feel free to subscribe if you do enjoy this sort of content. And if you have any questions, comment down below. We have referral codes in the descriptions. Terms and conditions apply to those. But feel free to check them out if you are new to the market looking for exchanges to use. But without further ado, let's jump straight into the video. Now, my first piece of advice to a new trader or a new investor would just be to DCA and hodl. Obviously, the whole idea of people wanting to, invest is that they want to put their money in the market. Ideally, you'd tell people to just, follow the market for 6 months, maybe use a demo account, but that's not how people work. They want their money in the market, because of FOMO and things like that. So if you're going to have to put your money in the market, look to just dollar cost average. Say you're like, I want to invest $1,000 into cryptocurrencies. Let's go $100 a week for 10 weeks. Ultimately, when you're new to the market, you just want to get a vibe. You just want to get the feels. You just want to see how these swings work. And the good thing about dollar cost averaging, as you can see, I've just pulled up a very simple Bitcoin chart and I've looked at how volatile these assets can get, nobody can predict what Bitcoin is going to do. If you bought here, you could be hitting a 17% drop. If you bought here, you could be having a 22% drop. But on the flip side, if you bought the exact low somehow, you could get a 26% pump, or in this case, from this low to the high, a 50% pump. So it's really hard to predict what Bitcoin is going to do, especially if you're new to the market. How you probably don't know how to read a chart. You don't really have any technical analysis skills. You're just looking to get in. So look to dollar cost average, avoid these sort of volatile swings, make sure you hold through them. Ultimately, in that first 6 to 12 months, you just want to get a vibe of the market. You just want to see how prices fluctuate, what can happen, and, just try not to get scared out of the market, right? You just want to, hold throughout these periods, because ultimately, investing works best over a long period of time. So if you can just hold, get through your first 6 to 12 months without selling, just slow dollar cost averaging in, I think that's the best way you can start off. Don't be looking to dump all in at one point or dump all in at another, because you can see, it could work out really well. You could get lucky, but chances are you're going to get unlucky and, buy the exact top, because I'm sure, as you guys are aware, sentiment gets really good at the tops and really bearish at the bottom. I guarantee no one was telling anybody to buy Bitcoin during this candle. I bet everyone was saying sell, it's over, and quite the opposite, right? We get to these sort of peaks and everyone says 100k imminent, buy immediately. You can see what happens. We basically flatline. So DCA, hodl, let's, try and hold for at least 12 months, get a feel for the market, and then go from there. My next piece of advice would be blue chips only. And what do I mean by blue chips? Well, there's only really, 2, maybe 3 blue chips that, you could really consider. And I guess, there's no clear definition for what a blue chip is, but the obvious one is Bitcoin. Your blue chips are pretty well just safe investment options. I'll put a quick description up on the screen here so you guys can just read it. But it's those things, your brick and mortar investments, things like that, right? Obviously, no cryptocurrency is a brick and mortar investment, but blue chip is the closest thing that you'll get. The three I would really consider would be Bitcoin, Ethereum, and BNB, because these tokens have lasted multiple cycles. Yes, XRP, is coming back now, but it's still under all-time highs. Solana's a bit newer. Dogecoin is in its second real cycle, so those ones could be considered blue chips. But the main ones I would say are just Bitcoin, ETH, and BNB. Now, if you wanted to get experimental, you can look out to the top 10, maybe the top 20 tokens. But realistically, I think you just want to stay in that top, ideally Bitcoin and Ethereum, maybe a couple of others. And as we said, look to the dollar cost average into these tokens. Don't experiment. Don't get caught up on hype trains. I saw this one, Hawk to wrapped ETH. Yes, that's a Hawk to a coin. You can see it is up, 50,000%. I don't even, what even is that? Like a 500x or something? I don't even know. But the point being, in saying that, just in the last 5 hours from the peak to now, it's down 50%, right? So, if you want to go gamble, these are the things that you can gamble on. But if you're looking to actually invest, this is not something you want to be looking at. Obviously, this is an extreme example, Hawk to a coin. But ultimately, stick to these ones here, Bitcoin, ETH. Look to just spot buy. Don't use any leverage. And just get a vibe for the market. That's what we're talking about. Get a feel for how these things work. These are still quite volatile tokens, as we saw. You can get pretty big moves. So, DCA into blue chips, hodl for, at least 6 to 12 months. The next piece of advice would be to don't invest too much. Basically, don't invest what you're willing to lose. You hear a lot of people say that, but no one really follows this, right? We all think that we're gonna, the money's just gonna go up, or what's the worst case? I might only lose 10% here or there. But the matter of fact is, even with tokens like Bitcoin, when we're talking about our blue chips, ignore all these extra lines on the screen. Even tokens like Bitcoin, they drop massive. This is a 77% move from the high to the low. Now, that's not to say you're going to cop that whole 77% move. Obviously, if you're DCAing and hodling, you shouldn't, you should be at least getting a slightly lower average. But the point is that these things are really volatile. If you invest, if you invested your last $10,000 in Bitcoin and you watch that drop to $2.5 grand, and that is devastating. Whatever it is, it doesn't matter whether it's 10 grand, 100,000, $1 million. It's all relative to you, but you don't want to get caught up in that, because ultimately you'll probably end up selling. So just invest a little bit, as we said, especially in that first, year. If you want to invest, $1,000 overall, maybe just look to do $50 a week for 20 weeks and see how that goes. And don't invest anymore, because ultimately that first year is really just going to be a learning year, getting a vibe for the market, seeing how things work out. I can almost guarantee most people in their first year of investing are not going to make money. Even if they make some paper profits, like Bitcoin rises a bit further, chances are they hold on for too long anyways. So investing is a long-term game. You need to spend years learning it, years mastering it. So that first year, we're really just talking about newbies, new people coming into the market. Just invest a little bit. Be very conservative with what you're going to invest. If you're going to invest $1,000, spread it out over the entire year. Take your time. Things will happen in the market. You won't miss out. It'll be fine. My next piece of advice would be, as we're talking about, just investing, dollar cost averaging, hodling into blue chips with a little bit of money that you're willing to lose over that first year. Try to learn at the same time. Don't just put your money in and say, oh, I'm going to be rich tomorrow. Actually try to go out of your way to learn a little bit about the markets. A couple of good channels, Jason Pizzino. I watch a lot of his videos, as you can see, a lot of red lines. I don't watch all of them, admittedly, but I do watch quite a few. He pretty well uploads every day, some different technical analysis. The other one I would recommend, I honestly don't watch, but I have watched in the past, Benjamin Cowan. Very good videos. He goes into quite in-depth detail. He's had a couple of really good calls this cycle. He was the guy calling for 60% Bitcoin dominance, which did end up happening, which was definitely against the narrative, or against what most people thought, but he was right with that call. And the reason I point these people out in particular is because one, they're very good at what they do, and you'll learn a lot from them. But two, they are very, very boring. Okay, that's the tough thing. You're gonna watch people who, I'll try and find a quick example. You know, if you compare these videos, like admittedly, you know, I think Jason Pizzino even, you know, jokes about like tacky thumbnails and clickbait thumbnails. Benjamin Cowan a lot less. He just puts very simple thumbnails and things, but their content is very slow, very boring. You know, not a lot changes from day to day, right? We're in the markets. That's just how things are. If you compare it to some, you know, just pointing this guy out in particular, nothing against him personally. You know, I just don't think he does very educational content because he's just, you know, clickbait, you know, how I'm going to make 20 million off meme coins. You know, this is all, you know, I'm sure he's a good trader for himself, but you're not going to learn off these sort of people that are, you know, carrying on about these random trading strategies. You know, if you just search up crypto on YouTube, you know, you see, you know, you do get some good content, but you see for the most part, it's going to be things like this, you know, heavily edited videos. You know, I did try and sit through this, but it's mostly just garbage. You know, heavily edited videos, not really teaching you a whole lot, giving you bullish hopium. You know, there are a few in between that are actually, you know, slower, more educational. They just look at the charts, they're telling you what's going to happen. But most of the videos, you know, that are going to pop up on your recommended are going to be trash like this. You know, here's another one that is worth watching if you want to learn what not to do. You know, another pretty trashy channel. They got way too many subscribers for what content they offer. Chances are you're not going to learn a lot of these guys. You're going to ride the bullish hopium the whole way up. You know, what if you watch these videos and then you go and you watch something like this, you'll see there's a stark difference. Try to, you know, I had to learn the hard way. I watched all the, you know, hopium videos and, you know, all the thumbnails and the, you know, flashy editing and all those things, and you end up losing out. But eventually, you know, if you watch enough people, you know, a good way to learn is literally just watching YouTube, especially because, you know, you can't go to trading school or, you know, go to a lesson or anything on it. Most of your education is going to come from, you know, things like YouTube or Twitter. So just go on, you know, you're going to have to watch some garbage. You're going to find, you know, slowly start to find people that, you know, make a lot more sense, that, you know, possibly have more accurate predictions most of the time, or, you know, their technical analysis is better, or you just learn off them better. So it's a slow burn trying to find the right people. These are two that I would recommend, you know, and stay away from this garbage that's just, you know, you have 24 hours left to buy Bitcoin, whatever, right? Whatever. It is what it is. That's just how the YouTube algorithm works. But yeah, go learn over this first year. You know, you got plenty of time to learn. That's the good thing about investing, is it's something you can take through your whole life. You know, and really just slowly, you know, get better at throughout time. And last but not least, just be conservative. That is, you know, probably not something you hear a lot in the markets, but that is just my opinion. You know, I find it a lot easier to be conservative with these things. You know, if you have a look, I'll try and quickly find my post. You know, you can see on this post here that I made, you know, January 2024, so almost a year ago now. The 2024 will not be the bull market year everybody wants. In fact, it will not likely be nearly as good as 2023. Now, I half got this prediction right, because we were predicting, you know, this is sort of besides the point, but we were talking about, you know, a breakout this month here, which is, you know, about October. It looks about like October breakout, which did eventuate pretty well. You know, October, November, you know, pretty close in terms of when we predicted the breakout. You know, but it looks like, you know, 2024 actually has been a pretty good year, right? You know, so far we're up 130%. But, you know, what I was more referring to with that was just, you know, this big pullback here, and the fact that, you know, will take a lot longer to eventually get, you know, to a new all-time high that, you know, we only pretty well, most of the year, we're only up about, you know, 50-60%, which wasn't nearly as good as 2023. 2023 was a great year for crypto. But the point was, you know, of what I'm talking about is, you know, just setting conservative expectations. You know, my opinion was, you know, 2024 likely won't be as good, and, you know, 2024 is going to turn out to be actually pretty, just about as good as 2023. So, you know, you might look at that and go, oh my God, Frankie, you were wrong. Which, you know, I was slightly, you know, I got this call right. I wasn't expecting Bitcoin to immediately pump, you know, another 50% up to about 100K. But, you know, that's not a bad thing, right? Like, you know, I had conservative expectations. You know, those conservative expectations, you know, weren't exactly correct. We ended up actually making more money. You know, how can that be a bad thing? You know, same thing again here. when it comes to the sell side, if I start selling, you know, at whatever price I start selling at, you know, if I've set a conservative expectation and I take my profits and I leave the market, compared to setting completely unrealistic, say I say, oh my god, I'm going to sell all at 250k, you know, that's just not going to happen, and I'm gonna end up missing out and pretty well riding the whole thing, you know, straight back down. You know, if my price expectation is 250k sell, when in reality, if I'd have just sold here or here or here or here, you know what I'm saying, right? You get starting to get the picture. You know, you take your profits and you leave the market. So being conservative, you know, is overall, in my opinion, a good thing. You know, as we said, you know, worst case scenario, if, you know, these are your conservative price, you know, expectations, worst case, you just end up making more money, right? But best case scenario, you actually end up, you know, purchasing with, you know, longer term time expectations. You know, like when I was buying Bitcoin all during here, yeah, my expectation wasn't to be at 100k before, you know, 2025. But if that happens, oh well, right? Like, yeah, so I think being conservative in the market is definitely, you know, something that is sort of a bit frowned upon, especially when you go onto Twitter and you see things like this. Michael Saylor just said Bitcoin is going to 13 million on live TV. Oh my god, guys, Bitcoin is not going to 13 million. Be realistic, number one, but even better, be conservative on your opinions. You know, take a good chunk of profits and then, you know, go live a happy life, right? Instead of riding the thing the whole way back down. But anyways, that is pretty well my points. If I was, you know, advising someone who was new to the market, you know, this is the tips that I would give to my grandma. So in summary, DCA and hodl, try to only invest in blue chips, be conservative with your, you know, price expectations and, you know, time frames and everything with that. Try to learn, you know, especially if you're new, spend that first year, first 2 years, first 3 years, really just trying to learn. You know, you're never going to stop learning and investing, but, you know, it's really important in those first few years to not just invest willy-nilly and hope things go well. Really try to learn the markets, and don't invest too much. Don't invest what you're willing to lose. You know, I guess that comes back to overall just be conservative with everything, right? Don't invest too much. Just invest in, you know, safer tokens, even though, you know, they're still very volatile. You'll still make good gains, or you'll still lose a lot of money. I can guarantee that. So yeah, just play things super safe in that first year. Anyways, guys, that is going to be everything. Thank you all so much for watching. If you did enjoy, remember to hit that subscribe button. We are pushing for 900 subs. Your referral code's down in the description below. So if you are new to crypto and you're looking to sign up to some new exchanges, there's, you know, plenty of good ones down in the description below. Of course, terms and conditions apply. So just make sure you meet the criteria to make sure you get your free Bitcoin or whatever it might be. Anyways, guys, thank you all so much for watching. I'll see you in the next one.